The yen inched lower below 146 per dollar on Tuesday as more signs of moderating inflation could take pressure off the BOJ to phase out its massive monetary stimulus soon. The December PPI was flat year-over-year, the first month without an advance since February 2021 and the 12th consecutive month in which price growth decelerated, partly due to government subsidies to curb petrol and utility bills. The number of corporate bankruptcies in Japan surged in 2023, topping 8,000 for the first time in 4 years. As a rise in the price of materials and wage increases hurt corporate earnings, Tokyo Shoko Research said Monday. The OECD urged the BOJ to gradually raise short-term interest rates and make YCC policy more flexible if inflation stays around its 2% target. Wage growth accelerates and the output gap closes. The organization was more optimistic that inflation will more durably settle around 2%, even though the pace of price growth will likely slow somewhat this year. Kazuo Ueda stressed sustained achievement of the target had not come into sight. The super easy policy has eaten into the yen's status as a traditional haven. Japanese companies are keen to expand their operations abroad, which has seen FDI outweigh overseas investment in financial instruments since 2014. Japan's bond market will largely take in its stride any normalization steps by the central bank this year, as the environment will still probably remain substantially accommodative, said Michio Saito, known as Mr. JGB. The yen managed to steady at the 50 SMA, but the risk is tilted to the downside given rising geopolitical tensions. The next major support is seen around 150.00, while hitting a new low seems unlikely.